John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hello, this is John Ulzheimer. I am a consumer credit expert. I have almost 30 years of experience in the credit industry. I've spent time at FICO, which is the company behind the FICO credit scoring system, and Equifax, which is one of the 3 generally recognized credit reporting agencies in the U.S. So today I'm going to answer a question that I get from consumers who have bad credit but want to get an auto loan. And specifically the question is hey, can I get an auto loan with bad credit? Of all the credit products available to consumers, auto lending is the one that has probably the deepest pool. And what that means is that almost anybody can get an auto loan. Practically anybody. In fact, if you have a job and you can afford the monthly payment, then there is an option out there for you. And I'm going to explain why that's the case. And we're going to, for the first time in a very long time, we're going to talk about horse trading as it pertains to auto borrowing. So there's 2 ways to borrow money to buy a car. There's what's called direct lending and what's called indirect lending. Direct lending is if you go to, let's say, hey, I know I'm going to buy a car. I think it's going to be $25,000. I'm going to go to my bank and I'm going to tell them that I want to borrow money in order to buy a car. Fine, you make an application. They pull your credit reports. They determine whether or not you qualify and under what terms. And so that's direct lending. So you essentially could go to a car dealership already with money ready to go and buy the car. That's called direct lending. You can also do what's called indirect lending. And so for those of you who have ever gone to a car dealership and have asked the dealership to try to arrange financing for you, and then the dealership, the F&I person, or it's called the finance and insurance manager, the F&I person, goes to their lending partners, usually some local banks, maybe some national banks, and they will pull your credit. The banks will pull your credit. Some people refer to that as shotgunning. And then they will see what kind of a deal they can get you from any of their lending partners. That's called indirect lending because you're not going directly to the bank to borrow money. You're going to them indirectly through the auto dealership. So here's where we're going to talk about horse trading. Most indirect lenders that have a relationship with a car dealership, obviously they want their business, right? So they're willing to go to the auto dealership and indicate to them, look, if you will give us 5 deals with good credit or 10 deals with good credit, we'll be willing to be more flexible on 1 or 2 that have bad credit. So in other words, essentially they're horse trading the consumers with good credit with consumers from time to time that have bad credit. So that's one way that you can get an auto loan through indirect lending. Obviously it's not a guarantee, but it does happen. So here's another way that you can probably get financed for auto lending. And you've probably seen some of those commercials from lenders. We can finance anybody, the advertisements. That's a little bit misleading. Here's how they're able to quote unquote finance anybody. So obviously when you go borrow a car, the car has a value, okay? Let's say hypothetically that the value of the car is $20,000. If you want to borrow $20,000 to buy that car, you're buying 100% of the value of that car at that time. That is a high risk loan for a lender, because if you default on that, then someone's going to come repossess the car, they're going to sell it at auction, and they're going to use whatever the proceeds are from the auction sale to cover the loan amount. They're not going to cover the entire amount because the value you're going to get at auction is going to be lower than what you would be able to get for retail for the car. However, if you are buying a car that's worth $20,000 and you're willing to put $10,000 down, then now you're only borrowing $10,000 on a car that's worth $20,000. So that is a much safer loan for the lender, and so they're going to be much more willing to go deeper into the credit pool, meaning people who have lower credit scores, to finance that deal, because they know, hey, look, if this deal goes sideways and the borrower decides not to make their payments and we have to come repossess the car, we're okay with that because we've only lent about 50% of the car's value. So we feel reasonably confident that if we do have to repo the car and sell it, that we're going to get back most, if not all of our money, if not more. And of course, they've got to refund the difference back to the borrower. They can't keep that overage. So that's where you see these people say, oh, we can finance anybody. Yeah, if you put 50% down, they'll be able to finance anybody. So those are some of the options available for consumers who have bad credit: direct lending, indirect lending, and then if you're willing to put a massive amount of money down, in those scenarios, as long as you have an income or can prove that you have an income, it's very, very likely that you're going to get approved. So if you have any more questions about auto lending and how it affects credit, or vice versa, drop them in the comments section below and I'll do my best to get to them. Thanks for watching. Have a great rest of your day.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.